Welcome to Spin Justice with me, Hayley Owens, the podcast where I'll be talking about anything from health and fitness to the injustices of the world and everything in between. I've worked within the criminal justice system for over 20 years and have more recently taken to teaching indoor cycling, otherwise known as spin. Each week I'll be talking to a different guest about a topic that's personal to them, whether it be to raise awareness or just because. Most episodes will contain strong language because of who I am as a person, so if that's not for you, then probably best to swerve. Any opinions expressed by me are my own. Today's episode is sponsored by DNA Boxing School of Excellence. Big up to Danger and the team there for all the amazing things they're doing in the community, whether it be kids classes or one-to-one boxing training. So if you or anyone you know are interested in improving their fitness, because why wouldn't you, make sure you give them a shout. Welcome, Tom Sawbridge, Sawbridge Financial Planning.
That's me.
We're going to kickstart the year with getting your finances in order.
Yeah.
So tune in, people. So, right, just tell me, and there's the reason I'm asking you this, about your background, about you growing up.
So I am from a working class background.
Yeah.
I didn't come from money, didn't have much money when I was growing up, but I wasn't really poor.
No.
But my mum and dad were both working class. They worked really hard, and sort of I never felt like I went without. But if I look back now and compare myself to others,
Yeah.
like for example, I never went abroad until I could afford to go myself. For example,
Yeah.
Things like when I was playing football when I was a kid. I used to have like if you play football, you'll know this, but there's like the different levels of boots that you can have, and there's like the cheap version and then the really expensive version. And I always used to have like the cheapest things, but I never felt like I went without. Do you know what I mean?
Yeah.
So I suppose, I don't know where you're going with this, but my background was really simple, and I found my joys from people rather than things. Do you know what I mean? Does that make sense?
Yeah, absolutely. And the reason I ask is because I've had a similar upbringing. So we grew up on my mum and dad bought the house.
Yeah.
Back in the days when you could buy a house for like $8,000, you know what I mean? Yeah. So but they've been together and married for over 40 years. So, it stood them in good stead, in my opinion, now, because they've got property that they own.
Yeah.
But the reason I asked was because I'm from a working class background, and I do think it affects your mindset on money.
It does, and there's a lot of people who don't, potentially have a lot of money growing up who feel like they just will never have it, and so what's the point?
Yeah.
What's the point? I'll never be loaded anyway, so why do I need to worry about what I'm doing with my money? I just want to enjoy myself. There's are you familiar with the phrase of lifestyle inflation? Does that?
No, come on, tell me more.
So lifestyle inflation is basically the process of you start working and then you earn some money. And then you get a better job and you earn some more money. But instead of making a decision at that point to go, okay, I'm going to try and utilise this opportunity to grow my wealth and make myself better off, people go, now I'm earning a bit more, I'll have a nicer car. Now I'm earning a bit more, I'll go on better holidays. Now I'm earning a bit more, I'll have better trainers, better clothes, all of that kind of stuff. And a lot of people from working class backgrounds fall into that trap because...
I would describe that as living to your means.
Yeah. Well, so living to your means, but often it becomes living beyond your means quite quickly because you feel like this is what I can afford and this is what I'm going to have. But you never then get into a situation where you can change either your situation or your legacy. I know that sounds like quite a cheesy term, but when you build your wealth, it's not just for you, it's for your kids and your kids' kids. If you can sort of change that path and change, the trajectory of where you've come from and where you're headed. Yeah,
and that's the whole point of this episode, because I want to touch on lots of different things that can help people think further ahead.
Yeah.
So that is absolutely brilliant. So lifestyle inflation.
Lifestyle inflation, that's the term that we use to where people just... as they earn more, they buy more, and they look wealthier to look at them because they've got a bigger house, bigger car, nicer clothes, all of the stuff that's sort of materialistic. But they never actually truly become wealthier, become like truly better off.
Yeah.
And so that happens really regularly, and I think it comes from, to be honest, like the way society is now, everyone wants everything straight away.
Yeah.
No one's got any patience anymore. If someone wants a pair of, I'll keep using trainers, but if someone wants a pair of trainers, I think, well, that's a bit expensive. They'll just Klarna it and go, oh, we'll just spread it over 3 months and it doesn't matter because I want it now.
Yes.
If someone wants a takeaway, they go on Uber and pay extra just to have it quicker. Do you know what I mean?
Yeah.
And that's sort of fallen into the way that people treat their money now. There's no patience in thinking like my grandparents would be, if you can't afford it, don't have it, and I'll save for it. Because that time that's saving for it or building towards something, people just don't like nowadays because of the way society is. Everyone wants everything straight away.
And I feel like I am very much not falling into that trap. Because I remember my dad always saying to me, if you ain't got the money, you don't have it.
Yeah.
And I've been, I'll come on to it, but I've been royally fucked over in the past. And it's taught me lessons. I'm talking 20 years ago. So now, the one thing I do not fuck about with is money because, like, I'm earning and I'm like got my house and whatnot. So I think, right, there's one wage coming into this house and I'm very, very shrewd with it.
Yeah.
So that is the one thing I've always thought. If I haven't got the money, I don't have it.
Yeah.
My car, my mates are driving around in nice cars.
Same.
I'm not.
Same.
I've had the same pair of trainers. These Converse I've got on with my sons because obviously they're going to the point now where they're overtaking me in foot size. I'm just having all their shit. I go, honest to God now, I shop on Vinted and charity shops.
Yeah.
Because that's just the way I am. The kids have got a lot these days.
Yeah.
And they never go without, not like we had to.
Yeah.
But not to a point where they're spoilt.
Yeah.
You know, like...
I think kids do just have more nowadays, don't they? They're so spoiled. They're not spoiled, but in comparison they are.
Compared to how we were brought up, they
and
are.
it's rare that you see a kid that goes without. Like the job that I do, I go around speaking to different people, sitting in their living rooms. And if they've got young kids, they've all got the same toys. Like, do you know what I mean? You see the same thing over and over again. I just think these kids don't know they're born.
No, compared to when we were growing up, honestly. Yeah. So basically, going back then, so working class background, you've then mindset around money, you know. What was yours like?
So it's sort of interesting, really, because money wasn't a thing to me really growing up. Because of what I've mentioned, like I didn't see money as a thing that was really important. It never was something that was a consideration. But I've always been quite ambitious. So I've always wanted to try and make the best path for myself, and always. I don't mean this in a bad way. My mum and dad never felt like they had that much ambition. Do you know what I mean? They were quite happy. Their mindset was, if we're comfortable, we're fine, and that's all we ever want to be.
Yeah.
I was always a little bit different to that. I always had aspirations to go, no, I can do a little bit more. I can make a little bit more of myself.
Yeah.
Because I always saw people who were like really comfortable. I thought that's where I want to be. Not just comfortable as in I can afford to live on the breadline and, you know, live to my means, but truly comfortable where people are relaxed about money and never worry about having to pay for stuff or whatever. And my mindset around money started getting influenced really quickly from the age of 16 because I landed a job in the bank.
Yes.
So, being in a bank, it's sort of really eye-opening because from before that, I had no real mindset of what you should do with money, what impact it can have on your life, what you should be thinking in terms of how you use it and what you do. To at 16, serving on a counter in a bank, and 1 minute serving someone who hasn't got a pot to piss in, and the next serving a millionaire.
Yeah.
And you get talking to these people, and you start to learn about how have they got to those positions.
Yeah.
And what I learned quite quickly is people think you have to earn loads of money to eventually become wealthy. And it's just not the case. It's the decisions that you make along the way that then will allow you to, even over time, grow your wealth. And absolutely anyone can become wealthy. And I saw people who were earning loads and had no money, and I saw people who you would look at or look at their income and go, they shouldn't be this loaded, but they are. What are they doing? And you start to think, well, there must be a way that everyone, absolutely everyone, no matter where you come from, where you start, how much you earn, can make decisions to get to a better position, basically.
Okay, so before we go into the advice, let's just quickly talk about qualifications, because there's a lot of people out there, especially on social media, giving financial advice who aren't qualified.
Yeah. So, I mean, I am diploma qualified to provide advice around pensions, investments, protection. There's a lot of qualifications that are built into that around tax and all of that kind of stuff. But what that means is I'm regulated by the Financial Conduct Authority. Yeah. So there's like an FCA register. Once you have the right qualifications to provide advice, where your company are on there, And that's the point where you can go, okay, you can trust what this person's telling you because they've got the qualifications.
Yeah.
I sort of feel like I've got 2 qualifications really, 17 years in banking, speaking to all of these different people and doing all the different jobs. But where I am now, it's the specific qualifications around it, providing advice, providing investment, pension advice. That means that I'm regulated to provide that information. And I do quite a lot of stuff on socials talking about it. And you have to be careful because there's a lot of stuff around investing where, your money's at risk and people have to understand that. So you have to be really careful about it. But when you look around on social media, and when I first started my business and looked around at what was out there to try, I suppose, and pinch some ideas.
Yeah, that's what it's all about.
Yeah. I started seeing so many people with really big followings on TikTok, on Instagram, who, when you look them up, are not regulated. They're not qualified.
Okay.
And what they're doing is they run different courses and get people to subscribe to their services and their, the different groups and stuff, giving investment advice. And I looked at that and I thought, well, that's really dangerous because if people are blindly seeing you on Instagram with a huge following, because that gives you authority and people go, they've got a huge following, they must be right, then they could listen to their ideas, listen to their guidance, go and do it in a DIY fashion for themselves and get it completely wrong. And also, it's not just investment advice, it's sort of like crypto. I don't know if you use TikTok, but if you're scrolling through TikTok, half of the lives are people sat there talking about crypto and what you should be doing.
Right. Let's come on to that because it was in the topics that we wanted to discuss.
Yeah.
So, I don't use TikTok now. I don't know. We've got a TikTok for the podcast, but I don't know how to use it. Can't sit. I have got the app on my phone, but it's one of them that I just don't know what to do. So I just don't go on there.
You don't have to do much. You just literally.
Yeah, but I just think, oh God, no. So Instagram, I've been seeing it. So I've been seeing either people that I follow or just in reels and stuff, people keep talking about cryptocurrency and people are going like, your money's multiplying overnight and this and that. And I'm going, this is a bit of me, man. I want in. I want in on this.
Yeah.
So I'm so glad that I can now talk to you because, right, if I was to go and put some money into cryptocurrency, how would I know where to put it and how, because it could crash tonight, couldn't it?
Yeah, there's a lot to say about crypto, and I don't want to be that financial advisor who just bashes cryptocurrency because there's a lot of them out there and go, you shouldn't use it, it's too dangerous and blah, blah, blah. The simple fact is that since it launched, Bitcoin was the original. So that was like 2009, launched, and you could buy, I think it was like 5,000 Bitcoins for like $5.
Right.
One Bitcoin now is worth $100,000.
What's that in English money?
So $100,000, 90 grand or something.
One Bitcoin?
Yeah.
Right.
And if someone bought it for like less than a penny, it's now worth nearly 100 grand. And that's what's happened since 2009 with Bitcoin.
Right.
So there will be a lot of people who jumped on it very early. I think it's the first time one Bitcoin was $1. There's a couple of years later in like 2011. So anyone who bought a Bitcoin, to make it more simple from the maths perspective, I suppose, 2011 to now, what's that, 13 years?
Yeah.
$1 worth $100,000.
Go on.
So there is the opportunity to make that kind of money, and we don't know where it's going to go. So it has happened, and there's definitely real lived experiences of people investing in crypto and making a lot of money almost overnight. 13 years to make that kind of investment growth is sort of overnight, really. It's really quickly. But there's a lot of flaws to it that can potentially catch people out, and that's the real problem that I've got with it. It's a lack of regulation. Yeah, it's the flaws. There's a lack of regulation. It's purposely not regulated. It was created as this thing to be separate to the bank, separate to what people associate with the system, so to say. And people could buy crypto and have it separate from anything that the government can regulate or whatever. And so it's stayed non-regulated. And so there's no protection around it. There's no agencies, no governments that are involved in making sure that people who get involved with it are protected when they're purchasing it. So that's the first real problem that I've got with it. The second one is that lack of history. It's been around for a total of about 15 years.
Right.
And if you compare it to traditional investing, where you've got 150 years of market data from all of the companies around the world, we know how economies work, there's lots of data, it's regulated. Compare that to 15 years where you're not too sure what could happen. That's where it becomes a little bit tricky to gauge on how you should use it and why you should use it.
If I was to go and invest in Bitcoin now,
Yeah,
and it grew, So let's just say, let's talk small. So let's say, I don't know, put $1,000 in there, or whatever, and then it multiplied to say 10 grand.
Yeah.
How quickly can I get that out?
Quite quickly. With Bitcoin, you could get it really quickly.
And how does it work?
You purchase it through, you use a platform.
Yeah.
And what people often do now is, because one Bitcoin's so expensive, you buy a percentage of a Bitcoin that you then sell on. Yeah. And people invest in it, and then people draw money out. It works a lot like traditional investments. People will invest in a certain stock, for example.
Yeah.
It's like, to use an example, if you purchase Google shares and then Google shares went up by 10 grand, you just sell those shares and then you get that money back.
Yeah.
Same with Bitcoin. So if your Bitcoin share that you held grew in value, you could then sell it back to the Bitcoin market, so to speak, and then you get your money back out. And Bitcoin's fine for that because it's really liquid. What that means is there's loads of people that are invested in it. So there's millions, probably billions of pounds that's invested in Bitcoin now. So there's enough people who own it for the money to be drawn back out.
Right.
What you see, what we've seen really recently, some of the smaller sort of newly launched coins, which are like meme coins. I don't know if you've heard that phrase.
No.
Something will happen. Some sort of meme, people will use it to create a cryptocurrency that people can then buy, and sometimes they shoot up in value really quickly.
Right.
I saw a story the other day where someone had gone onto their like coin base that they were using, and their 80 quid was worth £1 million. But here's the thing, they went to withdraw it, because you would, wouldn't you? You go, I'll take the £1 million and just cut my losses from here on in. I'm sound. Yeah. But because it wasn't liquid enough, so the value of it had grown because more people had invested.
Yes.
But there wasn't enough invested in it to actually get your money out.
How much could you get out?
It was like 60 quid.
Don't lie.
No, it would actually dropped from what they'd invested.
So it's not real? It's monopoly money?
It is. It's exactly what it says. It's cryptocurrency. It's a digital version of currency, which is totally unregulated and totally separated from the normal system of finance and currency and
right, okay. Because I'll be honest, when you were talking about the Bitcoin, I was thinking, I want in on this. Like, but when you've just mentioned that one, that just sounds like a complete waste of time.
Yeah, and it can be really, a lot of the newer coins can be really badly manipulated, and it's one of my spin justices that I'm going to talk about. But the newly launched ones, you can have a huge influencer who comes out and goes, invest in this.
Yes.
And they put a load of money into it, and then the price grows, they withdraw it, then it recognises that it's gone down, and everyone's like, well, where's my money gone?
Yeah.
And you can lose a lot of money really quickly. There's quite a lot of established coins now. Bitcoin's the original, the most stable, I suppose the safest bet, if you like. But I try not to talk on it too much and give guidance, because there's not a qualification in cryptocurrency because it's so new.
Yeah. And it's unregulated.
Yeah, I don't invest in it myself just because of my background. I suppose I'm biased, and I think I'd rather stick to what we know about and what we've seen happen in the past.
Yeah.
But it's not to say that people haven't invested in it and made money. It's just really dangerous in terms of, if you choose the wrong coin, if you choose the wrong approach, you could lose a lot of money. You can gain a lot of money, but you can lose a lot of money really quickly also. And it's that risk for me that makes it, you have to be willing to lose absolutely everything that you invest in it.
Right.
And if you do that, you might become a winner. That's the way you have to look at it.
Okay. So let's talk about savings and investments then. So if you had some money that you wanted to, or if you were saving for example, for your children, where's the best place that you would advise to put that money? Or is there a multiple? See, I use premium bonds. I've been saving with the kids' dad, my ex-husband. We've saved for the kids since they were little.
Into premium bonds?
No, not always. We did just have their own bank accounts, but when it reached a certain level, I thought, I want to put it somewhere
that might make it work.
That might, because it never decreases in value, does it? So you're always going to draw out what you put in.
Yeah.
And if you've worked out a strategy like we did, when they reach 18, and don't get me wrong, I'm not going to hand them a load of money. I'm not stupid.
That'd be wild.
But there's going to be a pot there that I'll be able to help them. Driving lessons, buy a car, whatever.
Yeah.
Not just me and Tom. And so we worked out, to do that, we need to put so much away, which is what we've done.
Yeah.
So because of that, when it got to a certain amount, I picked premium bonds because you can win on it. It's like a lottery, and you can win from like 25 to £1 million every month. There's a draw. I've got the app on my phone. You can click reveal results on the day, and it'll tell.
Creates a bit of excitement.
A bit of excitement at the beginning of the month. Have a one. No luck this time. Yeah. And then, but and if you can look, can't you, at the monthly stats, who's won, how much they've got invested, etc. So I would use that.
Yeah.
But I don't know anything else. So I just thought, I don't want to lose money.
Yeah.
And it's sitting in an account that's not really got a great interest rate. So let's take a chunk out and put it into that and see what happens.
Yeah.
So what would you suggest?
Well, the thing is with what I suggest, and this is, again, it comes back to being really careful what you put out there really publicly, is that advising what someone should do is really, really personal.
Yeah.
So for one person, investing with some sort of market exposure is absolutely the right thing to do, because it comes down often to two things. What's your objective and how far away is your objective? Because then you can choose what kind of risk you apply to it, and if you go into it at all. Yeah. Now, some people are really risk averse. So some people go, I just want it in something safe. I can get it back out if I need to. I don't want it to go anywhere. Some people go, well, if there's a chance of better growth and I've got plenty of time on my side, then I can sort of put it somewhere that might fluctuate a little bit, but then could create some much better growth over time. So it's not a simple answer to your question, but the most simple answer that I'll try and give, if it was for your kids, for example, you want it to be tax efficient. That means that the money that you make on it, you keep as much of that as possible. If you have just a savings account, everyone has a savings allowance that they're allowed to earn from interest from the savings, which is generally £1,000 a year per person. But if you're a high rate taxpayer, then you start losing that allowance. And what happens is the interest that you make from your savings becomes part of your income and becomes taxable. So you lose some of the interest that you make.
Bastards.
No, there's tax at every angle. There is tax at every angle. So you want to use something that's tax efficient. Premium bonds are tax efficient. You keep all of your winnings. They're classed as winnings rather than interest. You keep it all. ISAs, I don't know if you know much about ISAs.
Not enough about them.
So you've got junior ISAs where you can save up to £9,000 a year for your kids in there. Everything that's then made from the time that you invest in it up until the point that they can start taking it out at 18, you keep all of that interest.
Yeah.
And for adults, so for anyone from 18, you've got an adult ISA which you can put up to £20,000 a year into, and that everything that you earn in interest then, or growth if it's got market exposure, will then be kept. There'll be no tax out on it, but it's because you've got the allowance that you can put it into. You can't put all your money in there. £9,000 a year for kids, £20,000 a year for adults.
Right.
So it's about finding the right mix really for yourself. It's because there's sort of layers to creating wealth over time. The first is to make sure you've got an emergency fund in place. An emergency fund is 3 to 6 months of your income, just if shit's a fan, if you, I don't know, a boiler breaks or you lose your job or something. Yeah. And from there you go, okay, well then what are the things that I need to save for? Is it my retirement? Is it for a goal? I don't know, I want to go away at this point, or I want to save for my kids at this point, or whatever. And generally, if that is beyond 5 years away, that's when you can start looking, rather than at savings-based ISAs or savings or premium bonds, you can start going, okay, let's have a look at something maybe with a bit of market exposure. Yes. Because time creates a little bit of safety around risk. If you've got at least 5 years on your side, you've got time to ride out the fluctuations at the level of risk that you choose, to then see better returns as a result. So it's seen, people hear stocks and shares and they go, oh, that sounds risky, I might lose all my money. But generally, because of the way that often stocks and shares, ISAs or stocks and shares accounts are set up, it's really well diversified. It means it, rather than chance of losing it all, it's just chance of fluctuation. And if you've got plenty of time, it offsets the risk.
That's perfectly explained, because basically, if you've got time, put it into something where you can, because it's going to go up and it's going to go down. Yeah. But obviously, the aim would be to obviously say, if you think, well, I want to withdraw on this in 5 years' time, you just got to hope that it's at an up stage.
And you have to also think, am I willing to wait a little bit longer
if it's not
quite where I want it to be?
Yes.
And if you're willing to do that, and it comes down to your attitude to risk. So, like, you know, when I'm working with clients, one of the things that I talk a lot about is, how do you feel about risk? And people often go, oh God, I don't really like risk at all.
Not when it comes to money.
No, you don't, because it's hard-earned money. But then when I show them the graph, I show all of them a graph, and it shows the last 20 years. And there's like different lines on there. There's like inflation. There's the average cash savings returns that you would have got for the last 20 years. And then there's like a line on there which represents the worldwide economy and what you would have had if you had a diversified fund invested around the world. And so the graph starts at 100 grand 20 years ago. And for cash, it ends on about 125 grand with the average savings rate. But actually, inflation is higher than that. So what that means is the rise in the cost of living would have been higher than what people have actually made. So the money's gone backwards. Does that make sense? So they've not actually kept up with whatever that 100 grand needs to be worth after 20 years. And then the line which represents the markets ends up on about 700 grand. But that line, you've got the cash line, which is directly straight and no risk at all, no fluctuation. And then you've got the stocks and shares line, which really fluctuates. And it shows on there, like when COVID happened, when the 2008 crash happened, and all of these times where it does drop off and there would have been a significant backward step in the value of your money. But over time, even with the fluctuations, there's the opportunity to earn a little bit more. And it's important to note as well is that past performance and past data doesn't suggest that that's going to happen again, but you could take probably any 20-year period out of the last 150 years and it would paint quite a similar picture. Maybe it wouldn't be quite as good as that, maybe it would be better, but it would be a similar sort of picture when you've got that market exposure.
So how, if I was to think, you know what, I've got a bit of time, got a bit of money, I want to invest it in the right place, where would I even start? So if I wanted to go stocks and shares, because is there something on your phone that can tell you where the best things are?
Yeah. See, again, what people often confuse it with is I want to invest in stocks and shares. I need to now choose which companies I'm going to invest in.
Exactly. Minefield.
Yeah, exactly. But it doesn't have to be like that, and it shouldn't actually be like that unless you really know your stuff around the markets. So actually, there's very few people in the world who should be investing directly in stocks unless they've got money to play with. What you would choose is more like a fund, like a tracker fund or a diversified managed fund, where you basically give your money to this fund. It's managed by an expert. They invest it for you, and all you see is your money going in. You see it fluctuate over time, and you see the growth.
So they put it where?
You don't choose. They put it in thousands of companies around the world. They make sure it's diversified in terms of location. So if one economy is doing better than the other, they hold each other up. They also diversify it in terms of, I use this example, but they would never do this, but they invest it in like an umbrella salesman and an ice cream man. So when one's doing better, the other one's suffering. When the sun's shining, one's making money, and then when it's raining, the other one is. They wouldn't invest in those, of course, but that equivalent with companies.
Yeah.
So a fund manager takes your money, invests it. You don't have to think about where it's going. You just choose your risk and go, I'm happy with that level of risk and that potential fluctuation and that potential growth. And then you just put it in there. It's like having a savings account that just fluctuates.
And does it have to be big amounts of money?
No.
So you could put like quite a minimal amount in there.
Exactly. Yeah. You could set up a stocks and shares ISA, for example. And again, just come back to it. You shouldn't do this really unless you're quite comfortable with the risk that you're taking. And if you're not comfortable, speak to an advisor. That's the best thing to do, because then they will guide you through the process of choosing the right thing for you. But you could literally just like 20 quid a month and just see how it goes.
Oh, I'm interested
like,
in that.
Sort of, just sort of like dip your toe, see how it goes. And then what happens is you start seeing the fluctuations, then you become more comfortable with the fluctuations, and then you see the growth, and then you start going, oh, this is quite a good alternative for what I've been doing.
Like it. So you mentioned there, just touched on planning for your retirement. So I'm in a position, and I don't know whether this is I'm thinking it's a good position, that I've paid into a pension from like the age of 18. Just because it was part of the job. Like, do you want to, you didn't have to, but like, do you want to pay into the pension? So I said yes, and now I'm nearly 40. I've just moved that pension over to who I work for now, and it's actually a better rate where I'm at. So I'm just going to continue paying into that. Obviously, there's been times where I've been off on maternity leave, so it's gone down, and where I've been part-time and then gone back up to full-time when the kids were older. So it's fluctuated. But from the age of 18, and I'm not planning on finishing work much before I'm like 55, I don't want to work much past that, I'll be honest.
Who does so, to be honest?
I don't want to work now,
No,
I'll be honest. But like, I feel like it's just something I've always done. But there's so many people that haven't done that. So if you were to start it at, say, 40, where'd you start?
So the first place to start, if you're completely unsure, is by speaking to an expert. Find a regulated advisor that you like the look of. Someone who you can get along with and have a chat with on a normal basis. Someone who understands you and gets you. To talk to you on because they'll be talking around what's important to you in retirement, what is it you want to achieve, more so than what amount of money do you want to generate, and they'll guide you in that way. But the first thing is, if you're employed, use your workplace pension. The reason for that is employees get benefits that self-employed and business owners don't, in that because of the I don't want to use too many scientific terms, but auto-enrolment started in 2016. That was the government legislation that said everyone has to be auto-enrolled into the pension, and all of the employers have to pay in and match a certain amount that's being put in.
Yes.
So if you're employed, use your workplace pension because it's free money. If you put in, it depends on your employer. They all do have different schemes. Some are more generous than others. If you work for quite a big company, they will be quite good often. So you could be paying in 5% yourself and 10% from your company. And it's like an extra amount that you're getting paid for what you do.
Yeah.
Because people don't see it like that because it's not money that they can get hold of now.
Yeah.
But it's still for you in the future. And
It's for the future.
Exactly.
Yeah.
And people then go, well, I might not make it to retirement. Okay, well, your pension gets left behind to your kids then.
Yeah.
Would you not rather,
Exactly that, yeah.
rather than not have anything?
Yeah.
There's a good chance statistically you're going to get to retirement. Make sure you plan for it so you don't get there and it's crap. And then if the worst happens, it's extra for your kids and you've sorted your kids out.
Exactly. And I think that's really important as well, if you have got a pension, to make sure that your beneficiaries are listed on there.
Yeah, there's an expression of wish that's attached to a pension. And people, I've seen horror stories of people not say that, I don't know, they had an old job and they left the job and then they got divorced.
Yeah.
And on that old one, it was their ex-wife.
Yeah.
Because that's that's the expression of wish. That's where the funds have gone from, a large old pension pot.
And if you've done the dirty or something, you're going to be like, ain't you? It's mine, thank you. Yeah.
So make sure your expression of wish is always up to date. Just check on it once a year or something. It's a difficult thing to think because you probably won't think to do that. Oh,
please, people, you've got to. You've got to make sure that you're up to date with this stuff because,
if you haven't, if there's one thing you get from watching this, go and check your expression of wish on your pensions. Make sure it's going to the right person.
Make sure it's going to the right people, because obviously mine is my children, but at one stage I was married. So, obviously I needed to change that because everything needs to go to my kids now.
Exactly.
It's easy. I've got 2 kids. It's 50-50, bang, like split down the middle. But and if I don't reach that age, them kids are laughing, mate, I'm telling you.
I think a lot of us are worth a lot more dead, aren't they? Than we are alive, sadly. But
throw a bit of life insurance in.
Exactly. Yeah, they're having a great time.
They'll be pushing me down the stairs.
Yeah, that's it. So sort of going back to the question. So if you're employed, use your workplace pension because it's free money, extra matching, do it. If you wanted to start saving for retirement and you're not employed, you're self-employed, then the options become like a self-invested personal pension or personal pension, which you still get a top-up on. So a lot of people don't realise this. Like I'll be speaking to people who are self-employed and they're like, I didn't really think I wanted to speak to you about pensions, but now you've mentioned it, that's the main thing I want to talk about. Yeah. It's because you get tax relief on everything you put into there. So every 100 quid that you pay into a personal pension becomes 125 quid. You get the equivalent of a 25% top-up.
Nice.
It's 20%, but the way it's worked out, it's like you put in an amount, that becomes 80%. They put a 20% on top. In real terms, you put it in, you get 25% on top.
Right. And
everyone can do that. You've got 60 grand a year limit. And so nothing else that you can put your money into would take your £100 and make it £125 as soon as it gets in there. Ooh. That tax relief helps it to grow. All the growth that you get on it, going back to keeping as much of your growth as possible, is all tax-free. And there's different ways that you can invest into a pension. Often there's market exposure, your capital is at risk, but if you choose it at the right level, based on the timeline that you're working to, you can work it out so that you're comfortable with the fluctuations, comfortable with the market exposure. And you can then start building for your retirement. So a lot of people who, say if you were 40 and you hadn't started saving for retirement and you have like a moment where you go, I better do something, then there's still plenty of time left to make your retirement somewhere close to where you want it to be. But you've got to be willing to invest in it.
Because let's face it, you've got a shorter amount of time.
Yeah.
So over the next 20 years or whatever, you've really got to think about where to put that money.
Whereas if you start young, you get the benefit of compound growth. You get the growth on the money that you're investing. And then if it's left there for a really long time, you get growth on the growth on the growth, and it really helps to build it up. So the pension contributions that you make in the early days will be the ones that have the biggest impact on your retirement.
And if you do it from the beginning, you're never going to miss it.
No.
Because it's always been the way. So you've got your tax, your national insurance and your pension.
Yeah.
And that way, it's just a given. That's where it's going. And that's what I did. And I've never fluctuated away from it. So,
and it's really easy to get used to that extra money. It comes back to that lifestyle inflation. Yeah, where you've got extra money, so you spend it. Yeah. Whereas if you didn't have it and you were building towards your eventual wealth, because that's what it is, paying into a pension or planning for your retirement, is building your wealth. And if it's not for you, it's for a legacy. So
yeah, exactly right. Today's episode is sponsored by DNA Boxing School of Excellence, situated on Maryvale Road in Birmingham and delivering fitness for the whole family. Big up to Danger and the team there for the amazing work they're doing in the community. For more information, check out the description below for their contact details. So, for people... Oh, sorry. For people, yeah, I'm going to get comfy now because I'm going to get animated in a minute. So, for people, right, because something I want to talk about is credit score.
Mm-hmm.
So, I'm going to get animated because I've had a shit credit score.
Right.
Right. In the past, not now, because I've worked on it over the years.
Yeah.
But I remember going back sort of 20 years, I talked about it earlier, I said I'd come back to it and now here we are. I was properly royally fucked over by a bloke. And as a result, the house that I lived in got repossessed.
Wow.
So you'll know, but not everyone will know, that when your house gets repossessed, it's almost like a CCJ, isn't it? You're getting fuck all for at least 6 years. And when I say fuck all, you ain't getting a bank account, you ain't getting a mobile phone, you're not getting anything, you're getting no credit.
Anything that references your credit file, you just
ain't getting it. Yeah. So I basically was in that position at about the age of 21.
Wow.
So before that, I'd owned a property. The relationship went south. I weren't going to the ins and outs. I could do, and I'd be quite happy to, but it's not what the episode's about. Maybe on another one.
Yeah.
So as a result, I was at the bottom.
Mm-hmm.
And this is sort of where I first got to know about your credit score.
Yep.
So, you know, like, say if you were to use Experian or Equifax as it was, I don't know if that's still going.
Yeah.
But it would, like, show you the dial. And where you want to be is, like, 999 out of 999.
Yeah. And
I was, like, in the red. Like, I remember I needed to open a bank account. I couldn't have one.
Yeah.
And... So there was one that you could have. I can't remember.
Basic account.
Like a real basic.
Yeah.
You couldn't
didn't
have any
have a debit
benefits.
Card on, no Visa or MasterCard
Nothing.
or anything. It was just literally like a cash card.
Yeah.
And somewhere to have your wages paid to.
Exactly. And that's where I was at.
Yeah.
So mobile phone, again, couldn't have any sort of contract. So this is before I had my kids and that. So a few years have gone on. I'm still in this position because the repossession is only maybe a year or two in.
Yeah.
So I'm still not getting any credit for the foreseeable.
Yeah.
And at that point, I'd met who I went on to marry and had children, right? So basically, we wanted to move in together. So you find a house, that you want to rent. And it was through an estate agents who do credit checks.
Yeah.
No, sorry, no. But luckily for us at the time, the landlord of the house, I explained what had happened.
You hunt him down and say, look, listen.
It was a woman and she was really sympathetic to the situation.
Yeah.
And she said, she could see that we'd both got good jobs.
Yeah.
And we were all right. We were going to pay the rent, basically.
Yeah.
And we were so happy there and lived there for years. But luckily, she listened to the circumstances. Not everyone's going to do that.
No, banks certainly don't.
No.
It's all automated.
Yeah, so we ended up moving into this house and renting because we can't get a mortgage. I weren't getting anything.
Mm-hmm.
So we started renting and then went on to have kids. So, and it even went on, like, obviously to get married. But I remember the day before I got married, I was like 5 months pregnant. Now, alongside this this repossession was like a secured loan on that house.
Right.
So the repossessions happened. Fuck off, you ain't getting anything.
Yeah.
But you've got to pay this loan back, right? And it was like big money. So good as gold, I'm paying my half of it every month. But the other party would occasionally not pay it. But it didn't just affect him because it was joint, it affected me.
Yeah.
So I'm 5 months pregnant, day before I got married, and I get a call like this payment hasn't been made. Just imagine the stress.
Yeah. It is. It's really stressful. Anything around credit is really, really stressful.
Oh, just anyway, fast forward a few years, it's been paid off. The repossession sort of went, expired, and I could start getting a bit more. But in the meantime, I had to improve that credit.
Yeah.
So I got advice from places, and over time built it up. I tell you what, when I logged into that Experian or that Equifax and saw 999 out of 999, I was literally fucking buzzing because I'd spent so long trying to get from that to that.
Yeah.
And it is you have to play the long game.
You do. It's I think the first thing to say is that if you do have some sort of issue like a CCJ, like missed payments are less serious, but they can still affect you in the same way. They're still saying you file for 6 years. Like a repossession is something as serious as that. All isn't lost. You just have to sort of sit back and go, okay, well, this has happened. I'm just going to have to get on with it for like 6 years or whatever, and sort of deal with it. A lot of people, when I used to work in the bank, used to say, "Oh, I've been told I need to get a credit card to improve my credit score," and it's sort of true and sort of not. You're right about it being a long game. There's no quick and easy way to improve your credit score, and everyone sort of starts with a similar basis point until any data can be fed into that system.
Yeah.
So what you have to be aware of is what data is impacting that system and the score that you're getting. To try and cut a long story short, the first thing to be aware of is that not all of the free services that you can use to monitor your credit, in my opinion, are being completely real with you. The reason I say that is I used to work in a bank. I have signed up for all of them. As soon as I saw a new one come on the TV, I thought, oh, Clear Score, all of these different ones. I thought, I'll go and have a look at them. And what I started to find is that they all had different score ratings. I thought, well, how does that work? If what I knew as Experian with the 999, who at the time, it might be different now, I'm out of the game, so to speak, but the Experian was a go-to for all of the banks and stuff. Well, if Experian are giving you a certain score out of 999, how can ClearScore really give you a score that's different? And that makes sense. Turns out that one of the credit unions uses a 700 score rather than 999. I thought, fair enough. And then I was checking my own, just having a look at it, and I had, I'm not trying to brag, but I had a 999.
Tell you what.
Yeah. But I had 999 with Experian, and I went on to one of the others, and it put me at like 500 out of 700. I thought, how can there be such a
not be at the top?
Yeah, how can there be such a differential? And then there's a thing underneath that said improve your score. Oh, okay, fair enough. I'll hear you out. I know that it's fine, but I'll hear you out. Clicked on it. It was like, take out this credit card. Here's and it started advertising all of these financial products which were credit to me. And I thought, well, they're not being truthful there. They're not giving you your true score because they want to make you think that it's worse and then sell you a credit card to improve it.
Crafty.
It is, and I suppose it's a clever business model, but it's really crafty, and it might make people, because say if you didn't have a credit card and you took one out because of that, and then you didn't quite have the self-control, which is really easy to do with a credit card. All of a sudden you've got a few grand that's there and available to spend just with a tap now.
Yeah.
That could actually create a much worse position for someone than someone who just didn't have a credit card and was fine anyway. So be careful of that. That's the first thing that I would say about it. Don't get sucked into these sites telling you that you need to have some sort of credit to improve your score. But effectively, the way that the system works is each time that you apply for credit or a bank account or a mobile phone or any kind of, agreements that involves credit, it knocks your score down a little bit. But then as you pay it back, that gets recognised by the system and then it improves your score back above where it started. So say you had 900, it might knock you down to 850. By paying that off for 6 to 12 months, it might take you to 910, 920. That's not the specific science behind it, but that's the kind of how it works. Yeah. So it's important to know what will improve it. And what will improve it is having agreements that you pay back on a regular basis. And if your credit's quite poor, it might have to be quite simple things. Just having a mobile phone contract, just having, I don't know, a small agreement for a new appliance or something that you might be able to do. Information from your utilities is in there often. So, just keeping it up to date with your bills, that will all help to build it.
Yeah.
Just on itself. And you just have to do that and play the long game. There's certain things that, will impact it in the other direction as well. So you could have lots of things that you're paying off on time, but say you had a credit card, which you had a £3,000 limit on, and you had £2,000 owing.
Yeah.
You could be paying that off on a regular basis, but because you're utilising more than 50% of your available credit, that knocks your score down more than it benefits it.
Yeah.
So the simple sort of answer to give is take out something that you need rather than you want or that you don't need, and make sure you keep up with it.
Yeah.
Phone, small payment towards a new washing machine or whatever, something that you need, and keep up with it. There's really not a a great amount of things that you can do which will revolutionise your credit score. It's a really simple system that works for everyone, based on data, based on your repayment history, based on the usage that you have of those different things.
Yeah.
And then there's always the possibility, even if you work loads on your credit score, that different credit providers will see your things about you and will make a decision anyway.
Yeah.
So certain occupations are seen as higher risk people than others. So you could do one job over another one, and have you ever? I don't know if you've applied for many loans, but a loan will always have an advertised rate range rather than this is the rate that you definitely get. It might be 7% to 24%.
Right.
And they'll look at your credit score and they'll look at your circumstances, your occupation, and everything about you, and they'll place you somewhere on there based on how risky you are.
Oh.
Yeah. So you could have
classed as a risky occupation.
I don't know exactly what they are, but there's certain things that are seen as riskier. That I don't know if
truckers.
Doesn't even have to go that far, to be fair. You don't have to do some crazy occupation to be considered higher risk. There's certain ones that I know are safer risks. So, like if you work for the government, if you're a teacher or in the police or whatever,
you've got a stable income.
Yeah, you're seen as like less risk.
Oh right, okay.
But then there's
thinking risky.
No, not like crazy stuff, but so all of that. So you could be brilliant at repaying everything you've ever had, and then get scrutinised for what you do, and it's not even your fault, to be honest, and you could get a worse deal as a result.
So basically, if you've got a bad credit score, you need to start fixing it now.
Yeah.
But don't expect this to happen overnight, because it will not happen overnight.
Accept that it takes time.
Yeah. So I was like 21 when this happened. Now, geez, I've then had like 2 kids, got married, still couldn't get anything, and I've been in my house 10 years. When I moved into my house, I couldn't get a mortgage. However, it was one of these rent-to-buy schemes.
Right, okay.
So I've rented it for a relatively low rent for a couple of years. But the deal was, at the end of the 3 years, you either buy a percentage or all of it, or you move out.
Yeah.
There is no in between.
Yeah.
So I got myself onto a scheme like that. And I was on my own at this point with the kids. So I rented it for 3 years, and then I bought 40%.
Yeah.
And then over the years, I've staircased to a point where I now own it all.
Yeah.
But it's taken, I'm 40 in June. So it's come to a point where it's taken me like 19 years. I've only bought all of it this year or last year.
Yeah. And now you've still got the mortgage which you're paying off.
And now obviously still got that. Now, like, that's taken me a real long time to get to a place where I'm sort of okay with how that's gone, but it's taken forever.
Yeah. And the sad situation is, if you have some bad fortune like you, there's not a quick and easy fix. There isn't. You just have to sort of accept it and go, okay, where am I now? Where do I want to be? How long am I going to have to deal with the issues that are on there, and just work during that period to do what you can.
Yeah.
As you know, depending on what the nature of it, what it is on your file, there will, say if it was missed payments, that will generally tend to affect you for slightly less long.
Yeah.
If it's other more serious things, that will, potentially hold you back for much longer. There's quite a lot of companies, especially around mortgages, who are they're considered the subprime market, where they are willing to take on people with poorer credit, and they might give you a slightly less great, like a shorter grace period. So they might say, if it was over 2 years ago, then we'll still accept you, but then it's more expensive because they're taking on higher risk. You're seen as a bigger risk.
Yeah.
So all is not lost, but you just have to accept that for a while it's going to be more expensive to get credit, if you get it at all, and just trying to do the right things in terms of, if as and when you're allowed to have credit, whatever that might be, even starting from something as simple as a mobile phone, that you make sure you're really conscious to keep up those repayments.
Yeah. And lastly on that, my opinion would be very, very careful entering into a joint finance with someone. And that's because I've been burnt.
Yeah.
So once bitten, twice shy.
Yeah.
I went on to get married and have kids. I didn't even have a joint bank account with my ex-husband because I'd been fucked over. So I thought, I ain't doing it again.
Yeah.
So I have always took control of my own money from that point. So it's probably done me a favour in one way, because I know where I am.
Yeah.
And I've been like shrewd and savvy.
Yeah.
With it since then. But I know people that I've said this to, and they've completely agreed with me because they've been in a similar situation.
Yeah.
How much can you trust someone when it comes to money? This is the thing.
Anything that's joint is exposed to that. So whether it's joint credit or a joint bank account, what I've seen, again, going back to my time in the bank over the years, is someone, say a couple have had a joint account, they're not even married or anything, and they might have opened a joint account a few months into their relationship, and then they fell out, and then one of them's emptied it out and left it in an overdrawn position. They're going, well, I didn't do this, so it's not on me. It is. It's a joint account. It's in your name, and they go like, well, what can you do to the person who has taken all the money out? In truth, you can't. It's a joint account, and both of you agreed at the time of opening it to have equal access to it. So you're both allowed to take that money from there.
Yeah.
And it's very difficult for any sort of justice to then prevail in that situation, because they've both got equal rights to that account and both got equal opportunity to build up an overdraft or whatever it might be. And I'm quite old-fashioned. I like the idea of having a joint account.
Okay, right.
But I think it comes down to if you've got like lived experiences where you're thinking, oh, stuff that I ain't doing
Never
that.
Again.
There are still certain times though where things, even if you keep them separate, are still joint. So if you get married and then you get divorced, everything's split down the middle anyway. So you could be married and both have your own accounts.
It's not about that. It's about being fucked over. So it's like because if both parties in that case were honest, then you are going to split things down the middle. But like you say, if you've got one that wants to do the other one over, I think so I'm going to empty this account out, go into the overdraft, and then it's then affecting the other person's credit history, credit score for years. And that's the thing. It's like, for me, it's just like, if I know what's going in and what's coming out, only I can be held responsible. And I know it's quite, not everyone's going to agree with it, but that's what has had to work for me for the last 20 years. Yeah,
it's quite a cynical position, but I suppose you have to be cynical sometimes. Yeah. You have to be thinking, well, what could happen if I do this? How could it affect me? Credit especially, be super careful who you enter into credit agreements with. It's an impossible question, I suppose, how much you trust the person, because at certain points you will absolutely trust them, and then 6 months later you could absolutely hate their guts. But
or 6 years or 10 years.
Yeah.
So, it could change. So just be careful about entering into joint credit with anybody. And I know people have got mortgages that are in both names.
Which they have to be sometimes to be able to afford the property. Do you know what I mean?
Yeah.
So it's just about being careful. Anything joint, bank accounts especially, if there's money sitting in there, you both got access, how much you trust the person, but then also credit, because it can, like as you found out, sadly, have a really lasting effect and just hold you back from doing loads of stuff that you wanted to do.
Yeah.
Just make things really annoying and difficult for you.
I know, yeah. Right, tell me about your spin justice, because I'm really... Sorry, Carl, am I moving? No, you're good. Tell me about your spin justice, because I'm really interested. When you've briefly told me before we started recording, I really want to hear more about it.
So the spin justice comes back to our conversation around crypto.
Yeah.
I don't quite know how to say it, the hoc
tour. What is it called? Hoc tour.
I think most
is
people...
Is it followed up with spit on that thing?
Yes.
Yeah. Okay.
Yeah. So
I don't know the ins and outs of this, by the way. You have to tell me after. Tell me after.
You don't know about hoc tour?
I know that this girl.
Right.
I don't know why she's so famous. Do you want to tell me? Do you know?
I know the basics of it,
then.
yeah. So she got stopped on the streets. These Americans who do these street interviews, and they're like, I can't remember what the guy said, but it was like something about how do you keep your man happy or whatever. And she's like, you've got to...
Go on.
You've got to make sure that you hoc tour and spit on that thing.
Right, okay.
It was something like that, right?
Right. Okay,
so,
if anyone didn't know.
So that went viral. I've got
my mum and dad are watching this.
I know, it's so embarrassing. So, that's what it was. That went viral.
Famous, like Ginge from Shard End.
Yeah, it happens. One short clip can change someone's life. And in today's world, she then, in many ways has jumped on that opportunity. Apparently she's making millions now from loads of different stuff. From literally that. She's done nothing else, but she's here, there and everywhere. And it's quite normal for people who take that path into fame to then end up in crypto. Because what they do is, because Hoc Tour became such a massive meme, she then created Tour coin, so the $ Tour, because they've all got like the little handles, if you like, which she then launched.
So that's like a crypto coin base.
A crypto coin, yeah.
Right,
so it's a meme coin that she's created that people can then purchase and invest in. And the same would happen like with Bitcoin, where it grows in value depending on how many people invest and so on and so forth.
Clever.
So, but she's got a huge platform, a huge following now, just literally from that and nothing else. So sort of imagine this, someone who's famous for that is launching a crypto coin that people are then going, I need to invest in this.
Right.
Thinking it's going to be a great investment.
Okay.
When you break it down like that, you think, well, that's fucking stupid.
Right, okay.
Don't you think?
But because she's got such this big following now.
Everyone's heard
gone
about
viral.
it.
Everyone's heard
She's got
about
this
it.
big platform to launch it and go, invest in this and it will grow because it's the latest big thing in the crypto world. So anyway, what happened is that she launched it.
Yeah.
And thousands and thousands of people were investing a lot of money into this coin. And within 20 minutes, it peaked and then dropped by about 75%. Okay. So what that would have meant is, say, for example, you saw it jumping up because everyone's doing the same. It's this new coin that she's launched and everyone's doing the same. People are going, oh, that's growing. I might be able to make a quick few quid. Yeah. Now, normally with crypto, it happens, over a slightly longer period than this. It might be a few weeks or months before you see it go right up and then come back down.
20 minutes.
20 minutes. So the stories now of people trying to take her to court because they invested it. They saw it, invested in it. And what they're saying is that she would have invested in it herself and then she would have dragged her money out and then that would have caused the value of the coin to tumble, which created the effect of losing so much value in such a short period of time.
Right.
So it goes back to and highlights some of the potential issues that you get with crypto, where she launched it, people all over the world invested in it, and potentially you could have lost, say you invested 100 grand in it, you could have lost 75 grand in 20 minutes and it hasn't recovered to be able to get that back.
Pisser.
I know, it is. So meme coins, make sure, I would say don't invest in them personally. People make money in them. That's a problem because they launch and they shoot up. This is where...
But it's like gambling.
Yeah, that's exactly what it is. And you were talking about, I've seen people who invest in it and make loads of money overnight, and it can happen.
Yeah, but you could go and chuck a load of money on the roulette table.
And exactly. And so, 20 minutes, which I don't know if it's a record, but it's got to be close to being a record for the biggest sort of drop in crypto overall.
What a cracking spin, Justy. Thanks for that. And educational.
So just be careful. Stay away from her coin, if anything else, but stay away from the meme coins.
Right. Do you want to know mine?
Go on.
Not educational. Well, it is actually. It's on the educational theme.
Right.
So my son, one of the youngest, is in year 7.
Yeah.
He's been there a few months now. And he comes home and he tells me, I've been sent out of maths, I've been sent out of this, I've been sent out of... Yeah. Anyway, the other day, turns out he spent half of his school day in the corridor and no one's telling me. So if he chose not to tell me, luckily we're a very open household, so he does tell me stuff. And then I'm like, why? What are you getting sent out for? Like rocking on my chair or... That's nonsense.
Stupid stuff.
Nonsense. So he's basically spending half the time in the corridor for just nonsense, and they're not telling me. That's the spin justice for me. Why am I finding out off a 12-year-old who, let's face it, doesn't have to tell me? Because I'm not getting any emails. You don't really get any report. You get like one report a year, one parent's evening, and that's pointless anyway.
You know what I think it might be, though? I remember back when I was at school, there was a couple of teachers. I used to walk in there and they'd send me in the cupboard and my mate in the corridor before we'd said a word.
This is it.
It'd be like, you in there, you in there. We'd be like...
I haven't done anything.
But because we'd been little knobs, then obviously that's what's caused it.
Yeah.
And I think they almost don't want to highlight it because it will expose them for poor,
especially me being the gobshite that I am, because I'm going to go like, all right, what's he done then?
Yeah. Like, do you know what I mean? If they said I was rocking on your chair and you go 3 hours for rocking on your chair.
Come on now.
That's probably why it's not getting back.
Yeah, okay, right. You're just fueling the fire here.
I know. It makes sense though, doesn't it? Imagine if a teacher's just sending him out for ease.
Yeah.
Rather than dealing with the situation and controlling the classroom properly.
He's not a naughty kid. But then equally, like he said to me, since he's been old enough to talk, what do you want to do when you grow up, Jack? I want to be a boxer. It's all he wants to do, right? He goes to the gym. And then I'm actually all the way through, and what I've said, like, with my eldest lad, who's, like, in year 10, please just keep your head down, like, half because when I get these emails, it's stressful for me.
Yeah.
And I've got too much going on to deal with that bit of stress, when actually that's probably quite selfish. And I should just then say... So what I've started saying now is, okay, what is it? Rocking on my chair, don't worry about it. And it might go, it was a really shit lesson anyway, like teachers shit that make it really boring. Some you remember
could be giving you
school.
half the story, to be fair.
Oh yeah, because they do. And I don't disagree there, because I don't take everything as gospel.
Yeah.
But you remember when you was at school and some lessons are just
hell. Loads of them where you just tune out and you think,
Yeah.
You do piss about because what else is to do?
But up to now, I've been sort of like, please just keep your head down. Please just do your work. You know, just try and get some grades. And now I'm half thinking, like we said, when was the last time you used algebra?
I've worked in a bank for my whole working career,
Yeah.
and I don't think I've touched on any of the GCSE maths that I did.
Can you explain Pythagoras theorem to me? Yeah. No, you can't.
No one has ever said those words in the bank in my whole career in financial services, where people go, "Oh, you must be good at maths."
Yeah.
No one's once mentioned like how you work out the area of a circle.
Yeah. Or pi. I mean, Carl.
Hey, yeah. Before you talk to me about my account, can you just tell me how I've got this circle that I need measuring?
Yeah.
Can you tell me how I work that out using pi?
Exactly.
Yeah.
So, and this is where I'm sort of veering towards now, because when he tells me stuff as well, I half agree with what he's saying. And he's a real, like, stickler for, like, what's right, bit like me, bit like the injustice. If he says, but that weren't what happened and I'm not having it.
It's difficult. It's difficult as a parent, isn't it?
Yeah.
Because, I mean, I've got 2 young guns, and there's been a couple of times where his teachers have spoke to me. He's only 5. I just think, how do I address this in the best possible way to get him? I mean, my missus is a teacher, so she's mortified. She sees it from the teacher's perspective.
Right,
Do you know what I mean?
okay.
So she's had years of little shits doing her head in, and so like she would be much more strict and have a much bigger reaction than I have.
Yes.
But it's hard, isn't it, to try and find
the middle ground, because I want them to go and I want them to do all right in what they like doing. Let's face it, I hated maths and I hated science, and I got real shit results in both. I did. We're talking E's.
Yeah.
Double E in science. It was a double award. I just didn't get it. I just didn't like it. I don't like it. I can't be arsed. I went to school for a social. I done all right in English, and PE was my thing, and like drama, media.
I did drama. I got an A in drama. Actually.
Did you?
Yeah.
I didn't do that well. But I didn't need it really. You know, I sort of 18, sort of went into the police, and you didn't really need any qualifications then
drama
anyway.
might be helping you now when you're doing a podcast and stuff.
Yeah,
you know what I mean?
yeah.
You present yourself.
Yeah, but have any of my qualifications got me here? No, they haven't.
The truth is, no one even cares about it when you get to a certain stage. Imagine asking someone in the 40s who's applying for a job, what do you get in your GCSEs?
Yeah.
How ridiculous is that?
How ridiculous is that?
Some companies still make you do it and put your GCSE results on there.
Yeah.
And I just think, what difference does that make?
That for?
Yeah.
Imagine I've got 20 years life experience dealing with people from all walks of life.
Yeah, or specific experience in a particular area.
Yeah.
That's surely more worthwhile than got to see in. Oh yeah, I've got to see in maths.
Yeah. Bullshit. So that's my spin justice of the week anyway. So you got any shout outs?
I haven't got any particular ones. I thought about this when you asked me to do it. I thought, who should I shout out? I thought, I don't want to shout out that person, not the other person. I'm going to be quite cringe.
Shout out your own business.
I should. Okay. Well, I could and I couldn't. If you want to find out more about what I do, sawbridgefp.co.uk. Go and have a look. I have to be careful because of the nature of what I do about talking too much about it, but all the information on what I do is on there. Go and have a look. But I also just wanted to shout at my wife, and I said, is that really cringy? Am I allowed to do that?
You can do it if you want.
Yeah. I do. But you know the reason why? I thought I'm doing something that's going to be quite public, and I never, ever say how much I appreciate her. So Sarah, I love you. I appreciate you. She's just so much. No, but she's been a great support. I set up my own business a year ago. She's just got on with it. She works really hard. She works way more hours than me, and so she deserves a shout out. So that's what I'm giving it to.
What's her name? Sarah.
Sarah,
well
I
done,
love
Bab.
you.
Shout out for me now.
Yeah.
Mine is, so you know I teach spin.
Mm-hmm.
So I teach at a couple of different gyms, and I finished at one gym last night for the year.
Right.
So that means basically I've got a couple of weeks off from the one gym.
Is it no such thing as festive spin then? Is that not?
We'd done a festive spin last night.
Did you?
Last night and the night before. I did too. Because I run the bookings myself at that gym, it would have caused me twice as much work with people cancelling because of Christmas plans.
Yeah,
so people with all the best intentions will have booked on for December. But then when it come round to it, they've probably been on the piss the night before, or they might have picked up a bug because it's December and it was all that going round. Or tired, or they've got to do the Christmas shopping.
Yeah.
And I know what would have happened. There would have been that many cancellations that I've then got to fill. So early doors, and I'm talking about October, I said, do you know what? In December, I'm only going to do a couple.
Yeah.
We're going to hit the festive spin that week, and like some people wore festive stuff, and we had a bit of a snowflake light going on in the background, and we had a festive playlist, So it was nice. So I finished that last night, but I've still got a bit of teaching to do at one of the other gyms I'm at. Just just to keep my hand in.
Yeah.
Just to stop the screaming in my head. So that will sort me out. But it's my spinners that I wanted to shout out, because at Newman Uni, where is one of the places that I'm teaching, I've got such loyal people turning up.
Really?
And, you know, like turning up week in, week out. There's people that don't ever cancel. There's people that will take a cancellation at last minute. There's people that will book in with me. Like one of my ladies who got Spinner of the Year.
Yeah. Is that a thing, Spinner of the Year?
It is for me.
Is it?
Yeah, I just invented it myself.
What does that involve? You like
basically like I do like Spinner of the
something?
Month. Nah, so I do like it's me recognising something in people. So like, for example, I invented Spinner of the Month.
Right.
Or Spinner of the Week. So if it's a Spinner of the Week, I'll say, this week so-and-so's turned up to 3 classes, she's took cancellations last minute, or he's took cancellations last minute, and have a spin on me, that basically. So you just have a free session on me.
Right.
And it's just to keep the incentive
I bet people
going.
love that, you know. And it sounds really insignificant, but I bet they quite enjoy being
You've got to give
Spinner
back,
of the
haven't you?
Yeah.
So then Spinner of the Month might get like a free spin and a gift. Yeah. And when I'm saying gifts, I've given out like hampers, I've given out boxing tickets, I've given out branded water bottles, you know, just whatever.
Yeah.
And then Spinner of the Year, I've basically just said to this particular lady who's been spinning with me from the beginning, so we're getting on 2 years that I've been doing it now.
Yeah.
She don't ever cancel, Becca, if ever you're listening. And she said to me at one of the sessions this week, am I booked in for January? And I was like, yeah, you booked in for January. And she was like, I said, to be honest, Beck, I'll just book you in anyway, like, because you've been so consistent for so long. I don't ever ask you, I just write you in.
Yeah.
Still got an old-fashioned book.
Have you?
Yeah.
Oh, God.
Oh, yeah. Just easier. Carl's shaking his head.
It's not easier, is it? No.
Yeah. No, you
It'll
don't.
make your life
Got my
way easier. There'll be no chat. You can. Yeah. Yeah.
All right, we'll talk about it after.
You do. It's
but
way
I just
easier.
got her in and she said, do you know what? You might as well just book me in for the year. And I thought, do you know what? You can have January on me for that. Just for being that loyal. You can have a month's spin on me.
If you're doing anything that's on like a self-employed basis or a basis where you need people to take part and have loyalty, it means a lot.
Loyalty.
Yeah, exactly.
Oh, God, yeah.
It means a lot, doesn't it? So if you can give something back.
And you know, things like using social media, you're using it, I'm using it, where it's the cheapest and easiest way to advertise your business. Follows and shares and likes are really important.
Yeah. And you know what I find as well is that, and we're probably going off on a massive tangent here, but like you find like people become cheerleaders for you and they're sharing your stuff and you think, oh, I didn't expect you to do that. And you're so grateful.
Is it people that you've never met as well?
Sometimes it is.
Yeah, it is.
Yeah. And sometimes it's like...
Sometimes you're closest.
You've got this idea of who's going to do it. And I'm not having to dig at anyone here because no one's under any pressure to do anything and share any of my stuff. Of course, people don't want their whole social media littered with just my face. Do you know what I mean?
Yeah.
But I've got people who do.
Yeah.
Every time I post, I stick it on the story.
Yeah.
Every time I post, they're sharing it with a friend. And I just think I'm so grateful for that.
Same.
Because it's costing them nothing, but it's like they're going out of their way to keep supporting me. And you can't buy that.
Yeah.
It's so nice.
Yeah, and I think there are people that who you've thought would never share your stuff and they have.
Yeah.
Or people vice versa, do you know what I mean?
You know, the first time it starts happening, it's weird, isn't it? Don't you think? Where you see someone sharing your
No,
stuff,
I just think it's lovely.
Yeah, I didn't expect anyone to share. I didn't think anyone would give a shit about what I was doing.
Yeah.
No one's really going to care.
Yeah.
When I first launched the shares, I thought,
I've got some people that listen to the podcast and then they'll like take a picture of the telly and I repost it because
I've seen,
it's almost, because if they tag me in it, it comes up where you can add it to your story.
Yeah.
Sometimes people put it on and I might not see it because they've not tagged me in it.
Yeah.
So I'll always add it to my story because I think, I absolutely love that you're doing that for me.
Yeah.
But then there's people that just don't do it. There's probably people that listen week in, week out and I'd never know.
Most people are just passive watchers and listeners to stuff.
And don't like.
Yeah.
I'm a liker, I am.
See, I never used to be. And in truth, before I started posting for my business, I didn't use social media much at all. I wasn't...
Does it change your perspective?
Big time. It's changed my perspective on what I should share, what I should like, what support I should give to people. Because there's people doing stuff who are trying to promote it, who I didn't share. And now that I'm in the position where I need people's help, I'm thinking, I'm so grateful for that. I feel a bit of a shit for not doing it in the past. Because I'm just used to look past it and scroll past it and, you know what I mean?
I'll get petty with it, I do.
Yeah.
I get really petty with it. I think I'll unfollow people.
Really?
No problem. If people don't follow me back or don't share my shit or don't like my stuff, I think fuck off. Get out of here. Yeah, do. I'm petty as fuck.
Yeah. See, I can't be
Car's
like that.
howling.
Because it's like for my business. So I
Shouldn't
need
be
people to
saying
keep...
this, It's not good for the brand.
Yeah.
It's real life, mate. It's real life, you arrogant bastard. There you go. In fact, off you fuck.
Oh my God.
That's written on my socks. That's exactly what I say.
Yeah.
Go on.
I sort of don't expect it of anyone, but it's really nice.
But when you need it yourself, because believe me, there's people that aren't liking and aren't sharing and aren't reposting and following.
Yeah.
But at some point, they're going to need it. And if they've not given it.
Yeah, it has changed my perspective. I used to be that guy that didn't share. I'll share anything now. Yeah. I'll support anyone. Good for you if you're trying to do something or achieve something.
I'll give you a round of applause all day.
Yeah.
If you're trying to better yourself.
Because I always, I never had my own business. I never needed that exposure. Without that exposure, I wouldn't have made any money the last 12 months.
Yeah, exactly.
So, and people sharing it, I've had people get in touch saying, I saw someone I know shared your post, I thought I'd get in touch. And that's invaluable. It's literally my livelihood. So I'm so grateful to people who do it.
Yeah.
So
big shout out to them.
Anyone who's a sharer.
Lovers,
big yourself
not
up.
Haters.
Yeah, that's it.
Yeah, brilliant. Most in-depth shout out conversation we've had to kickstart 2025.
Absolutely.
Thanks for coming on.
Been a pleasure.
Thanks, Carl. Today's episode was sponsored by DNA Boxing School of Excellence. If you have a topic that you want to discuss, get in touch at b31spinjustice@gmail.com or via Instagram @spinjustice.